This video is about applications of forecasting techniques in investment related decisions. How different type of techniques like moving average, exponential moving average find applications in investment related decisions. Here is a very important disclaimer. Please do not make any investment based on this short video. It is only for informational purpose. Real life investment decisions are based on a variety of factors, many of which are beyond the scope of this subject. So therefore, please take it only for learning purpose. The website that is very famous and very frequently used by investors is tradingview.com. The basic version is free for everyone. You just need to make an account there. Let's say if I click here Tesla, and as you can see here, June, July, August and September, those people who are actively involved in investing, how do they make decisions? The very first thing, moving average. Click on indicators, and on indicators there will be different type of indicators, but let's say if we go for moving average, if you just type there moving average, and we have many moving averages. Let's say if I click on this one, that's moving average, 2-period moving average, 10, 20, 50, 55 and 200, and I can further refine it by clicking on this gear, that's setting. I have chosen 10-period moving average. You can also choose 2-period moving average, 20-period moving average, 50-period moving, 55 and 200, but I chose 10-period moving average, and I chose black color for this line. This is one way, which means when people make these decisions, they see, okay, what's the current price? The current price is this one. As you can see here, current price is something close to 250, and this 10-period moving average is below that. This price is below 10-period moving average. It would mean that the stock is in bearish position and they would sell their stocks if they have. But if they find that the current price is above 10-period moving average, which is actually the case here, so this black line is 10-period moving average. If someone is to make a decision, they would say that the current price, that's 256.9, is above 10-period moving average, and that 10-period moving average is 235.76. They would take this bullish position. Then there is another thing, another indicator that's called as exponential moving average, or EMA. And for EMA, let's say if I get this one, 50 and 100. Now here we have 50 and 100. If I click on this gear, first one is 50. So 50 appears as black and 100 appears as red. So this is exponential moving average, which means latest data values are assigned more importance than the past one. And as you can see, 50-period exponential moving average above that. Now those investors who use this technique, they consider this cross. So you can see here this cross happened somewhere in the month of June, and exactly on June 6, 2023, this cross happened, which means this black line, that's 50-period moving average, it crossed 200-period moving average. And what exactly it means, because 50-period exponential moving average, it's relatively a short duration compared to 200-period, they interpret a bullish trend here. And this cross happened on June 6, and when this thing happened, it means they would take it as a bullish position and they would buy more. Now here in this case, for instance, in October and exactly on October 5, 2022, this 50-period moving average sinks below 200-period moving average. This indicates bearish position, which means Tesla is going down, which means many investors who are using this technique, they will sell their stock. Okay, now let's see some other stock. Let's say Ford Motor Company. And if we use moving average, it's always better to start with the moving average. Its current price is at 12.14, and 10 period moving average is 11.97. So which means although there is not much difference, but current price is higher than 10 period moving average, they would consider it as a signal to buy. Okay, let's go to exponential moving average. You see here these crosses where this black line and this cross happened on June 14, which means on June 14 this black line, which indicates 50 period exponential moving average, it crosses 100 period exponential moving average, and many people, they will consider it as a bullish position, which means they will buy more. And actually, if someone they buy at this position, and you can see at this point price of the stock was 12.47, and then it rises to 15.41, so which means they might have made a lot of profit. And then when they realize that this black line that represents 50 period moving average is sinking below 100 period moving average, they would consider it as a bearish position, and they might sell their stocks or they won't buy anymore. I mean, depending upon whatever is their strategy. This is how moving average and exponential moving averages are used for decision making. Once again, moving average and exponential moving average are a very small part of decision making. There are many other factors. For example, one of them is called as Bollinger Band, and that's also very informative. But we are not going to discuss all these things, because there are many other factors that are considered in decision making.